The markets can be tough, and today we'll review 3 of the best advanced trading strategies you can use in 2021 to boost your skills. If you are starting out, I do recommend you check out Being Crypto's previous beginner strategy review. Now remember, before we start, there is no crypto trading strategy that will always be a winner. Successful traders don't succeed at every single trade. Traders just employ different techniques that have them making a profit more often than making a loss. Now, if you are new, please help support the channel by liking this video and subscribing. We're getting super close to hitting our 10K target, and we'd love for you to join our Being Crypto channel. Now, first on today's list, we're going to take a look at crypto breakout trading. We're going to review the breakout trading strategy. A crypto breakout trading strategy is based on the idea of support, resistance, and channels. Well, what does this mean? The patterns that form in the readings of this and many indicators are on the price action. So what you're looking for here is patterns for break, particularly around channels and wedges. And they're really key elements to keep an eye out for. Now, to be able to adopt this trading strategy, you have to be familiar with the terms like head and shoulders, wedges, and bullish and bearish pennants, and also triangles. If not, here are the patterns for you. Feel free to pause the video, take a screenshot, do whatever you need to do, just so it remains at the forefront of your mind. Now that you've seen these patterns can actually show up on high and low time frames, because the price can stay inside a pattern like this for variable amounts of time. But when you see a significant break occurring with sufficient volume, it's likely that this action will have some notable momentum behind it and also could carry on for some time. Now, it is really important to note to be careful, as there's no guarantees that breakouts are going to continue once you optimize those trades. Occasionally, what you can see in the market is there can be a spike or a dip in the price that looks like it's about to break the trend. And this is what is known in crypto trading as a fake out. So do keep an eye out for those as well. Now, this is why paying attention to volume and also knowing how to read volume is so important, because if the movement comes from a fairly small trade volume, then it's really unlikely that it's going to hold for a significant amount of time. It's also likely the price will revert back to its traditional channel yet again. Now, what I do want to recommend you to do is actually to practice trading these on some exchanges like StormGain or Bing Bong that offer dummy accounts where you can actually trade fake dollars against real-world data. This is where you can learn the ropes with literally no risk or consequence. So I really highly recommend beta testing this on yourself on a dummy account before you jump in with real fiat or real assets. See how you find it, and then let me know in the comments how you get on. Next up, we've got an interesting one. We've got crypto leverage trading. Now, you might have heard that crypto leverage trading stands to be one of the biggest gains in the industry. This is true, but leverage trading also comes with some of the biggest risks in the industry. Remember that leverage can be a double-edged sword and must be used with extreme caution. So first of all, what is leverage trading? You might have heard of it before, but you're not really familiar with what it does. Leverage trading is basically the practice of borrowing funds from the exchange to create larger positions than you actually have capital for. So I'm going to give you an example. If you want to purchase 1,000 US dollars worth of Bitcoin, because you believe the market is just about to go up, but you really only have 100 US dollars to spend, well, this is where leverage trading comes in. If your exchange does allow for leverage, you could, in theory, put up your 100 US dollars as collateral, multiply it by 10, and then the exchange will put up the additional 900 US dollars to make an even $1,000 position for you. So then when you exit the trade, you must of course give back that 900 US dollars, but you get to keep all of the profits you made with the total 1,000 US dollar position size. So if Bitcoin went up 10%, for example, your 1,000 US dollar Bitcoin leverage position would be worth 1,100. So since you need to pay back the funds that the exchange lent you to complete that 1,000, you'll need to give back the initial 900. Then you'll be left with 200 US dollars. 100 of that is pure profit for you, and the other 100 is the collateral that you initially put in. Now, this sounds pretty impressive. It technically results in a 100% profit trade, which has doubled your investment. But I do want to remind you, leverage trading isn't something to play around with. This ability to multiply gains also multiplies risks, because what happens when the trade goes the other way? Well, assuming that the same amounts mentioned earlier, when 10% drop comes, your $1,000 position is now only worth $900, and the exchange needs that $900 back to break even. So it will exit the trade immediately and then take its money back. And just like that, you'll be left with nothing, not even the initial money that you've put in. So if you are interested in leverage trading, you'll need to find an exchange that allows it. So some notable exchanges offering this type of trading include Binance, Kraken, and Stormgain. Now, depending on the exchange and the asset, you can actually usually find anywhere between 3x all the way up to 200x leverage options. So the possibility to make amazing returns and gains is definitely on the table. But should you take it? Our recommendation is for you to learn how to manage your risk while trading with leverage, or don't use leverage at all. It's safer that way if you're not sure what you're doing. Finally, for today, we have Telegram signals. Now, I'm pretty sure you've heard about these trading signals from expert traders that tell you to buy or sell a particular crypto at a specific price or at a specific time. So the crypto signal groups are popular because it gives investors and traders the opportunity to benefit from proven track records and also trading experience from other traders. So what happens when you join one of these groups? Well, ideally, the benefit is that they remove you from the idea and the risk of making bad trades and losing a ton of money. In theory, is that practical? Well, we're going to take a closer look now. Now, trading signals actually can't guarantee that whenever a trader from this group tells you to enter a trade, you will end up with profit. Traders and those that follow signals must ensure their trades are being effectively managed and conducted in proper risk management practices. So what kind of trading groups are out there? Well, some trading groups will offer education. They'll teach you how to interpret these signals so you can do your own homework too. In the long run, you should actually aim to be less dependent on them and also learn how to read the markets on your own accord. Now, if you start judging and analyzing the signals that you're receiving, you'll also learn from an expert how to use stop losses and how to set targets and also the appropriate points to exit and enter to maximize your profits. Trading groups like these do more in-depth information than what you could get from the internet or via analysis on social media. But also, guys, please be careful when exchanging these conversations with people online. You can't be too sure who you're speaking to. Always do your own research to back up the claims that they're making, and if it sounds too good to be true, it very well could be. At the same time, the collective group does have a benefit. You can celebrate your wins or have some comfort if you do experience some losses. Now, as we do know on this channel, cryptocurrencies can be extremely volatile, to say the least. It is worth you to do your own due diligence and also ensure that the provider that you're choosing has a strong social proof review and also a thriving community and online, and also a long track record of success. That last one, a long track record of success, is really important because not so many groups are honest and also not many prefer to share their past results. So Being Crypto do actually have a free signals Telegram group with education and free trading signals and also a 77% success rate that you can verify. The info is down in the description box below. Please make sure to check it out. And usually the most accurate crypto signal providers will charge a fee before allowing you to join their channel. Being Crypto's site is actually free, so make sure if you are looking to get involved, you can scope it out there. And if you are looking for other options too, we also have a guide on the best Telegram signal groups in the cryptocurrency space. You can find that in the description box below. Now, before we end, at this point you should have the basic information you need to begin to use any of these strategies for yourself. Maybe you've used some of them before and you can comment your experiences and share them with the rest of the Being Crypto community. Now, we also will leave the full trading strategy article below in the descriptions so you can check it out later if you want another format. Or also you might have a friend that might benefit, so feel free to pass it on to them and share the knowledge that you've learned today. Hopefully you'll have made it to this point and will make it clear that none of these techniques mean guaranteed success, but when used properly, it could help shift your odds to more increased profits. Now guys, let me know if you do use any of the methods. I really want to hear your thoughts in the comments. That is all for this video. Thank you so much for staying with us, and don't forget to like and subscribe. We'll see you all again very soon.